Four biggest US banks lost $47 billion in market value today, and that is because of contagion from Silicon Valley Bank. Silicon Valley Bank is the banking partner for nearly half of US venture-backed tech and healthcare companies. It's a pretty big deal. There's a couple of reasons that this happened. Number one, Silicon Valley Bank had a terrible balance sheet. Number two, the Fed has been raising rates. Number three, the founders that use Silicon Valley Bank have not adapted to this new environment that we're in. Asset liability matching from Silicon Valley Bank. What that means is that they just had a bunch of losses. So they had $1.8 billion after-tax losses on sale of investments. They're trying to raise $2.25 billion in order to cover those losses. And then number two, Fed has been hiking rates. So the interest rate hikes have tanked the value of those investments, leading to those losses. The founders that are using Silicon Valley Bank have not adapted to the new environment. They're burning a lot of cash. Banks in general experienced a contagion from Silicon Valley Bank. Number one, because people are still freaking out about the great financial crisis. And then number two, banks own a lot of the bonds that have lost value as the Fed is hiking rates. The FDIC reported that US banks' unrealized losses on available for sale and held to maturity securities totaled $620 billion as of December 31st, 2022, up from $8 billion a year earlier. So a huge increase in these potential losses, on these unrealized losses. It's silly contagion. It's more of a flight to quality, but it's definitely something to keep an eye on and could be a shoe that is dropping.